With a day to go, the S&P is booking a 3% gain for January, which bodes well for the rest of the year, according to Carson's Group Ryan Dietrich. My next guest says, yeah, we're off to a strong start, but he's cautious because of, yes, tariffs, one of the reasons for the remainder of the year. Let's bring in David Katz. He's the CIO at Matrix Asset Advisors. Good to see you, David. So you're not so, I mean, are you feeling bullish on the market overall here?
We've been very bullish for the last 2 years, but after 2 years of plus 20% returns and a strong start to January, we think the upside is more limited. The market now is at about 22 times earnings. That's at the higher end of a 14 to 22 range. So we just advise investors to be a little bit more cautious. Lower your expectations, expect volatility. We wouldn't chase this rally.
All right. Since we just heard, 27 different hypotheses about what might happen with tariffs, I'm not going to ask you to necessarily weigh in on that because we don't know. But you often have a lot of interesting stock picks and ones that might be out of consensus, like a Comcast, a little bit like a Microsoft lately, Dollar General, Texas Instruments. Why these names?
So a lot of names in our portfolio are working very well. For new money, we're most excited about things that haven't worked well. Comcast had a good quarter yesterday, but they did lose broadband subscribers more than expected, and the stock got taken out and shot. We think from the low 30s, the stock has a great risk reward. It pays a 4% yield. It sells at about 8 times earnings. So this is a good business, really smart management, shareholder-oriented management at a great price. We think the move from 33 to 39 or 40 should be pretty simple. Same thing, Microsoft had a good quarter, good outlook. The market, we think, overreacted, sold it off 5 or 6%. Microsoft had a great January of 24. Since that time, it's only up 5%.
Wow.
We think that's going to be a pause that refreshes, and we think Microsoft is a very good place for new money if you're looking for technology.
We make a lot that NVIDIA, the fact that NVIDIA has been flat really for 7 months now. Microsoft, you're saying, has basically been flat for 11.
Exactly.
That's interesting. So a couple of the other names, Texas Instruments, I mentioned. I mean, where else are you looking? And what do you think the net kind of tariff impact is going to be? Just giving more buying opportunities, or is it a real headwind?
We think tariffs are a loser's game. They're a loser's game for either China or Europe or Canada or Mexico, but they're also negative for the U.S., they're negative for the global economy, and they're negative for the U.S. consumer and inflation. So we worry a lot about that. The market has ignored it to date, but one day the market will wake up and get concerned about it. And that's why we think you're going to have a lot of volatility this year. The market's pretty upbeat. It's focusing on the good things with the current administration. We do think there's some possible negatives, tariffs, immigration policy. And as a result, we think you're going to see volatility. You could see a 5% correction at any given point in time. We wouldn't chase the rally. We'd be prepared to buy into any weakness.
All right. And some of those particular names you mentioned. David, thanks for your time. Appreciate it.